The U.S. markets, well, they may be closed, but we are here for you. We're here for your money. We're always here. We got your back. And one of the things we're talking about is China. It's back to trading after being closed last week. U.S. Dow futures are now rallying. Let's bring in Jerry Willis and Bob Wiedemer to join us right now. And Bob, let me start with you. Indications, obviously, it's a little early, but up 200 points. We hit a double bottom last week on oil and on the stock market. Could we have some wind in our sails going into the rest of the week?
Well, I think clearly we've got some wind, although it's kind of eerie that the wind comes on a Japanese market that's up 1,000 points because their economy declined in the fourth quarter. And Japan, I mean, China's exports were down, as were their imports. Their exports were down almost 6%, imports down 14%. Yes, that could give us a little bit of a boost because people are excited about central bank intervention, but this is something that I wouldn't consider a long-term rally. This is, I'd say, a bear market rally most likely coming up.
Jerry, you know, you always talk about staying the course and even the notion of buy low, sell high, which is the axiom we always learn in the market, but we rarely apply.
Well, that's right. I mean, everybody's asking me, all my friends are asking me, is it over yet? Is the volatility over yet? Is the selling over yet? I can't really answer that question, and nobody else can either. So you have to manage your portfolio for the future. You have to keep your eye on the bottom line, and that means always having the right asset allocation and sticking to it over time. You have to match your age, how much volatility you're willing to take personally with how you invest, and that's really how you make your portfolio work over time, Charles.
Although, Bob, listen, you know, in the 1960s, the average hold for stocks for 8 years. Now it's 4 months. You know, these whipsaws scare the heck out of people, and you think they're going to continue, right?
I think they are going to continue. I think they're going to continue to scare people. But, you know, that said, I do think if this market goes down enough, the Fed will come in and save it and push it back up. So
How
I think
can the Fed save it here, Bob? This is my question. They've got 25 basis points in their quiver. They've got zero credibility. And at this point, if they start to try anything else, even remotely close to QE again, wouldn't it signal defeat rather than anything else?
I think that's why they're reluctant to do just what you're saying, but I think they will, and I think $100 billion a month could go a long way to push this market up, and if that doesn't work, hey, kick it up to $150 billion a month. Something will work, but you're right, it's a little scary.
You know, Jerry, people have gotten away from the notion that just let me buy a great company and own it, particularly a great American company and own it, because they always hear about the Fed and all this intervention. Has it gone too far?
Well, people are scared to death. You're absolutely right. They've been through the dot-com sell-off, they've been through the housing bust, and they just don't trust the markets. And it's perfectly clear why that might be. When you have 26 straight days of 200-point or more swings, people see that volatility, they don't like it. And I would say this about today's trading, and I just firmly believe that all this central bank intervention is part of what's causing all this kind of concern and worry, because the regular market fundamentals aren't holding sway. It's all out of Washington, it's all Janet Yellen, and the idea, I think, that, you know, the idea that Japan's numbers were bad for GDP, therefore that's good for the markets because it could mean more central bank intervention. We're just back where we were. Yeah. We haven't taken one step forward.
Yeah, I agree with both of you guys, and I wish the Fed didn't exist, and certainly I think the current Fed and other central banks have made matters a lot worse. Jerry, Bob, thank you both very much.
Thank you.